It starts off by going into some of the prehistory, right? Most people are familiar with the Bretton Woods system, which was that, during the end of World War II, the United States, had their currency pegged to gold, and other currencies agreed to peg themselves to the dollar. And that was because the United States was, they were the dominant force after the war. They had most of the gold. They had, the least harmed economy compared to many of their allies and enemies. And so they were in a position to basically be the axiom of the system. And there were some competing forces back then. So there were some people that were advocating for something like a bancor, which would have been, essentially a basket of multiple currencies, like a neutral reserve asset. But then, of course, the United States' position was arguing in favor of making the dollar itself the center of the system.
Right.
And so the United States' position won out. They had the most leverage in that particular conversation. And so we had the Bretton Woods system. And so the flaw over time, so there were some economists like Robert Triffin and others that warned that this would not be a permanent system because eventually U.S. liabilities in the form of treasuries and dollars overseas would eventually eclipse the amount of gold that they can support those with and make it redeemable. And that's exactly what happened. So if you look over time, they had a gradual reduction in gold, and we had a continual increase in the dollar liabilities abroad. And eventually, in 1971, they broke that system. But you can look at a chart.
Running out of gold, and the foreigners were saying, "Okay, I don't want these green pieces of paper anymore. Give me my yellow metal."
Yeah, they called the bluff. They asked for the physical. And so we all look at 1971 as the key moment. But if you look on some of the data, there was several years leading up to that where it's clearly becoming unsustainable. And so ever since 1971, we've been in a floating exchange rate, totally fiat global monetary system, which is that all these currencies are just backed by nothing. They're not pegged to anything, and they're just backed by the U.S. government or in other countries their governments, which is that only that currency is acceptable for tax payments and is used as a unit of account. And that's how they kind of enforce the usage of that currency. But this, of course, opened a big can of worms in the 1970s because all these countries had pieces of paper. So how do you do international trade? How is that going to work, right? Because it's literally all the currencies pegged by nothing is totally worthless. And so starting in the early to mid 1970s, the United States made a deal with Saudi Arabia, which extended to the rest of OPEC, to only price their oil in dollars. So no matter who Saudi Arabia sells their oil to, whether it's United States, France, another European country, Japan, whatever the case may be, they only sell it in dollars, which means that other countries either need to earn dollars, so many of them will then price their goods and services that they export in dollars, or they need to exchange their currency for dollars. And that makes it so that there's a global demand for dollars. And so that actually was a very clever system at the time because they basically reordered something out of chaos, right? So it had all sorts of negative ramifications, but you can see their incentive at the time. And of course, that was during the Cold War. So the United States wanted to have as much kind of hegemonic power as possible against the Soviet Union rather than being isolationist. And so we had this system where the United States was not, the dollar was not pegged to oil, but it was essentially backed by oil instead of being backed by gold. And so instead of being redeemable for nothing, it was the only currency in the world that was pretty much, redeemable for oil.
Before we continue, help us by smashing that YouTube like button and subscribe now to this channel. This shows the algorithm that you value the information, and it helps us spread this message. Sharing is caring. Please like and subscribe now. Thank you. And now, let's continue.
Lyn, I'm sorry to cut you off there. How big of a percentage back then was Saudi Arabia's production of oil as far as global oil production? Was it like 99% or was it like 50%?
No, it wasn't 99%. I don't have the exact number. The United States was still a significant producer, but they started, holding it back after that. Saudi Arabia and the rest of OPEC was a very large producer, and of course Russia was a very large producer. So we had a similar dynamic as to now, but I don't have the exact percentages.
But with that agreement with Saudi Arabia, where they said, okay, you got to price it in dollars. I'm just trying to think through how much of global production at that point in time was specifically done in dollars. You see what I'm saying? Like if Russia was still probably selling their oil in rubles, let's say. So, was it 95 or any idea on that number?
I don't know the exact percentage. I know today there may be 10%, and then you have the rest of OPEC. It was basically a chunk that they could control a large portion of the global energy market, especially when you also add the U.S. share, which of course that any amount that they were dealing with was in dollar base as well, and so it basically had a critical mass of dollar support.
Got it. Okay.
And so from there, we had a really interesting system develop because we often think of this as the U.S. having an exorbitant privilege, right? So we are the only country in the world, pretty much, that could print money to buy commodities, essentially. That our quote unquote worthless pieces of paper could be converted to real goods. And by extension of the system, because the way network effects work, most other commodities were priced mostly in dollars, and we started to see a lot of global financing happening in dollars, meaning that if a company or a government in an emerging market needed to raise money, a lot of investors are, of course, wary about raising money and lending money and getting paid back in the local currency, so they would do it in dollars often. So we started to develop the infamous offshore dollar-denominated debts. Of course, we already had that before then, but it began kind of rapidly accelerating as the dollar further entrenches network status. Mm-hmm. And so over several decades, a problem that we've seen is that in order to run the system, the United States pretty much has to run persistent trade deficit because there's only a handful of ways that they can get dollars out there. So if you enforce a mechanism where every country in the world needs dollars in order to buy oil and other commodities, then there has to be enough dollars out there, right? It has to be a global currency. And so we're in a situation where, at the beginning of the system, the United States was something like 35% of global GDP, but over time we've gone down to something like 20% of global GDP, and a little bit higher, a little bit lower, depending on exactly what metric you use to measure it.
Right.
And so that's been an issue because something like close to 60% of reserves are held in U.S. dollars, and a very big percentage of global trade is in dollars, even though we're only about a fifth of global GDP.
Yeah,
and so
I'm sorry,
yeah.
Lyn, I'm looking at your report right now, and you've got a chart here that's from the BIS, or maybe the International Monetary Fund, and it's going over the percentage of global payments in specific currencies, international loans, and foreign exchange reserves. And you see exactly kind of how dominant the dollar is right now. But then the chart right below that is showing our trade deficit, which is just staggering, where it is now, where it was at the early 2000s, but then comparing that to where it was when this petrodollar system actually began. Unbelievable.
Yeah, and it's brought us down to, we used to be one of the world's largest creditor nations. In fact, we used to be the single biggest creditor nation in the world, which means that we owned more foreign assets than foreigners own of our assets.
Right.
But then over time, because you've been running persistent trade deficits, over time, now we're a net creditor, debtor nation, meaning that foreigners own more U.S. assets than Americans own of foreign assets, and so it's created a very interesting dynamic because we basically outsource. So in the Bretton Woods system, we basically chipped away at our gold stash to maintain the system. We kept kind of dismantling our gold reserves over time and reassembling that overseas. We kind of did that with our manufacturing base in this system, and so
right.
instead of our dwindling gold reserves, we have a dwindling manufacturing base. And what's important to realize is that Northern Europe and Japan, they didn't have that problem. So it wasn't like all developed countries had their industrial base brought down and kind of put in emerging markets. That of course happened to an extent, especially for cheap products. But the United States drew down its industrial base at a far faster rate than most other developed countries because we were the axiom of the system, and that's how this system was structured.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.